Okay, I want to talk about developing your core position. So I talked about more kind of higher risk, higher reward strategies of the ICO buying and flipping. But let's talk about core positions. I mean, a lot of times people don't want to focus on it because it's not as exciting. But what you want to do is build long-term wealth, and you want to think about your core position, one that you don't trade or don't trade very often, or trade quarterly, whatever your strategy is. But we want to talk about what that core position in cryptos is and even diversifying against that. So there's two basic aspects to this strategy. So let's talk about the allocation. I would put in your core position 20 to 50% of your holdings into that, depending on your risk tolerance. So if you don't want to spend a lot of time on it, don't want to think about it, then be a bit higher weighted. If you're looking for growth, then you want to do a little bit lower rated, depending on how you want to structure it. So three basic aspects to the core position. So one, any kind of position I'm taking, I want to be hedged against the market itself. Obviously, cryptocurrency is a new market. It is the future, but also, there's a lot of undervalued assets out there, and they're always going to hold value. So that's silver, 10% hedge, or 1 ounce per $1,000 you have in the crypto market. I'll let you do some research about that, but it's an excellent hedge and excellent kind of augmented position to the crypto gains. Okay, so you have two aspects of the core as I see it, which is the classics like Bitcoin, Litecoin, Ethereum, and the platform coins, and we'll go into that shortly. So Bitcoin, Litecoin, Ethereum. So Bitcoin obviously is the core position. It's still going to remain some level of market dominance. I mean, today it's 25%. That may go lower. Even if the percentage of the market goes lower, you're still going to see some good solid gains in Bitcoin. So it's a good one of the most stable coins on the market. The first mover advantage in case it becomes the world's default currency, for example. Hold a little bit of Bitcoin. I would, if you're in this game, you just hold on to a little bit of Bitcoin and put it into cold storage or a hardware wallet. So you have Litecoin. Litecoin's got a lot more upside potential in the short term, I would say, than Bitcoin. So it grew faster than Bitcoin. It still is a currency coin, so the potential is that it could grow because there's $1,000 trillion $1,000 trillion out there, and if it's replacing these or competing with those, it's a much larger market. So that's the upside. The downside is there are competitors like Monero, for example. There's Dash. There's other currencies out there. Litecoin has been around the longest, compared right after Bitcoin it was forked, and so it's a good stable hedge position. We call it the classic hedge. Ethereum as well. Ethereum is a smart contract system, so it has a lot more flexibility. It is a 1.0, 2.0 technology, and so it still has the first mover advantage as far as the smart blockchain goes. Still has a lot of alliances with companies, and so they're learning to build on Ethereum and building products on Ethereum. So with that first mover advantage, good growth potential, but again, long-term limited upside. But hold a core position. So that covers the classic. The other aspect of the core position I would consider is platforms. So the reason I talk about platforms, and this bleeds over to Ethereum a little bit, but if all the companies are using these companies, these coins are going to go up. And so no matter what services are built on them, on top of them, they're a stable grower and a pretty consistent bet as far as the crypto market goes. So when considering core positions, you think about, how do I get a great return, but still have minimal risk in the portfolio. And the best answer to that is classics. The second best answer is platforms. So, Neo is considered Chinese Ethereum. It's a 3.0 blockchain, which means it's faster than Ethereum. It's more easily accessible. And, China is receptive to it. They're not as receptive as to Western-backed currencies, but being that was built natively, they're open to that. China is $1 billion market, or a billion-person market, much larger economy potential than the West. So at $100, you could see that as undervalued compared to Ethereum's $1,000, and it only has a third of the supply. EOS is a 3.0 blockchain, so it's going to be faster once it comes out. And at $10, it's going to be a bigger grower, I would say, than Ethereum. But that is a Western-backed currency, and but the Western world is large. So you're talking about the United States, you're talking about Europe. So good potential there in EOS. ADA is an EOS competitor. It's another 3.0 blockchain. So you're going to get some good platform there. They're still early stage. That should be a good stable grower. Just keep in mind the supply side. We would have to be in the to reach, for example, $40 in ADA. They're less than less than $1 at the moment. We'd have to be in the several $1 trillion market cap, or ADA would have to command a $1 trillion market cap to have $40. So it's doable, but again, just think about it as a good stable platform to diversify a little bit. IOTA, Wabi, and Internet Node Token. So these three are Internet of Things. So these are emerging platform markets. When you have the smart homes, when you have all these devices, they're going to need some kind of payment layer. And when you have technology there, you're talking about that's the kind of future of value, future of tech, and those coins are designed to capitalize to be the value layer on the Internet of Things platform. HPB is high performance blockchain. That's the new one out of China. So the INT tokens and the HPB are newer platforms. They have the most growth potential, but also the most risk. But these are quote unquote Chinese knockoff ones. But being that they're originating within China, and you have the billion-person market there, these are pretty undervalued at the moment. So it's some things to consider as far as growers, as far as platforms go. So that's the basic kind of 1, 2, 3 punch. The classics, the platforms, and the silver hedge. I would consider that to be the core positions. Let's talk about understanding the philosophy and developing those core positions. So you want to, if you're going to kind of refine that, having good information sources is going to help you position that, understand that mindset. It's kind of like this, if you want to be as safe as possible but also maximize growth, you want to have a kind of Jekyll and Hyde mindset. Whereas on one side, you are acting to minimize risk and still have good, stable growth. The other side is a little bit more aggressive, goes after ICOs, goes after swing trades, those kind of things. But as far as the kind of protective aspect or the core aspect, I could say, there's some good resources out there. Box mining, again, these guys are all very intelligent and have been in the game a long time and don't take risky positions. They look for long-term value. So box mining, CryptoLark, Data Dash, he's more the technical analysis guy. And just as far as trading fundamentals and investment fundamentals, these guys are all good. CoinMaster is the same way. Long-term, value-minded thinkers. And so, minimal risk and kind of vanilla, which, have that be one aspect of your portfolio. So brings us to some more fundamentals as far as values go. boring is good. We think as long as we're talking about the core positions, don't be afraid of boring. Don't be afraid of waiting. It's an opportunity to kind of get control of your own kind of ADD mindset, or not seeing something moving for a while. You can kind of check your own character in this sense by having a boring aspect. It's just one aspect of your portfolio. And as far as the core position, patience is good. If you would have held Litecoin for the whole year this year, it would have been up several thousand percent, almost 6,000%. So, or Ripple, $1,000 Ripple, you'd be a millionaire. So this is the kind of thinking that goes into it. It's the hodler's mindset. It's the patience mindset. So even though that's not as sexy as day trading or ICOs or anything like that, or the latest hype coin, having that be an aspect of your portfolio is going to kind of keep you in the game long term. And you can add other assets and elements to this to kind of add more risk reward, add more growth. And these are and then if you don't know what to do with your high growth positions, then you can stick them back in your core positions because it's fairly safe and they're going to grow. So the core position is for locking in gains, is for long-term growth, and so that's kind of what I want to communicate. All right, take care. Bye-bye.